Welcome everyone to the live. Happy Monday, everybody. Beginning of the work week. Hope you all get after it and stack some sats like I did. Force Total, always stacking sats on Monday, or at least always announcing that I'm stacking sats on Monday. What I'm talking about here is, of course, this pleb release, weekly pleb release, everybody. 100 Canadian dollars every single week. I'm trying to compete with Michael, trying to compete with MSTR here, except I'm showing off how important it is that you as an individual begin to stack sats, that your individual stack is what matters the most. And you can go around this any way you want, right? Like you can buy Bitcoin as I show here. You can earn Bitcoin and you can create value in the world and convert that value into Bitcoin and hold it as long as you possibly can, which should be the case for any wealth that you build. And I'm going to talk about why self-custody is important. I think this is something that I need to talk about more and more. And we're going to get into that. But first, I want to let everybody know that I am streaming on Zapstream. So if you don't know what Zapstream is, I'm going to show you real quick. Zapstream is basically a really great website to watch live streams. It is Nostr native, and you can zap people. So here's my stream right here. When you click that, you can watch my stream as we're unfolding, but you can also zap if you're connected to Nostr, and I'll receive those messages, and it's a way of providing value, essentially. I'm also on Primal, on Amethyst, on Damus, streaming as well. I believe on all of those. I definitely know I'm at least on Primal. So you can check that out. And we'll do one other thing here before we get too much into the show. I'm going to give away some sats. So that is courtesy of Bitcoin Well. Bitcoin Well is a non-custodial exchange, which means when you send them dollars, they send you Bitcoin directly to self-custody. This is, again, on brand, on topic, because I want to share some information that I've come across in the past week that has made me reevaluate to some degree the revolution that is self-custody, the real basically there's a lot of aspects of Bitcoin that are very revolutionary. The ability of triple ledger accounting, the proof of work that powers it and protects it and makes it so that and the cryptography behind it that validates the absolute truth within the ledger. All of those aspects are revolutionary, and I think one that oftentimes is just sort of a given, or that people just sort of underestimate the importance of, is the revolutionary aspect of self-custody. So we're going to get into that a little bit more. But first, I want to give away some sats. So the way you would receive these is if you have a Lightning wallet, there's going to be a QR code popping up any second here. You go to receive, you would open up your camera app, and you would scan this QR code that's about to pop up. And hidden within this information in this QR code is an invoice that will send you 630 sats if you're the first person to scan it. If you're the first person to scan this, you win 630 sats. We're going to do one more, and then we'll do two at the end of the show as well. And I usually go for around an hour here. So we'll do one more, and we got some people in the chat. What's up, Letha? Letha the legend. Good to see you. And 65 sats. Hello. Whoa, 65 sats, and we got 565 sats. That's kind of crazy. Huh. Interesting. And of course, if you do want to support the show, you can do so again through the zapping on Zapstream. You can also send some sats up here, and you can also share, do whatever, it's all good, whatever. Okay, so let's talk about self-custody a little bit, and then we'll get into some questions. If you guys have any questions, throw them in the chat, and I'll get to them after I go on a little bit of a rant here. I actually want to show you guys one last thing. I know I keep just bringing things up here, but this is what basically sparked a little bit of a rethink for me on the concept of self-custody, the importance of self-custody. It's really obvious, just sort of like, on a real base level, subconscious understanding that self-custody is important. That if you allow somebody else to have custody over your possessions, that they have a lot of power, a lot of control within that. And there's that saying, 9/10 of the law is possession, right? So we sort of have this base understanding that if you can own something, it's a good idea to do so. Um, but there's some caveats with that, where self-custody with Bitcoin has a level of difficulty, a level of complexity, a level of technical knowledge that you need to have. And so therefore, any sort of friction, if that friction is too much for the individual, it's very easy for them to go an easier route, even though it's less secure. So this week I listened to, on recommendation from Boomer, shout out Boomer, on or the Broken Ruler on X. He suggested that I watch this podcast right here. I guess it's a live, actually. This one here, 2 hours and 50 minutes, from Simon Dixon. Was Bitcoin a CIA project? A topic that I was pretty bored with immediately upon hearing. Tucker Carlson talked about, Bitcoin is created by the CIA and therefore he's not invested in it, blah, blah, blah. I made a video about it. It was just sort of just a quick rip. This guy went so deep into it, bringing up different clips about different information. And essentially, this is really well worth the listen. Not to come to the conclusion of, okay, did the CIA create Bitcoin? Who created Bitcoin? There's not going to be a satisfying answer there, but the other additional information within there is incredibly important. And I've listened to this guy before on some spaces and stuff, but I found this incredibly insightful. So I would recommend checking this out. Simon Dixon on YouTube. Go to live and check out this one specifically. Now, what he talks about essentially is that there is a system in place, which he refers to as the proof of weapons network, right? Which is kind of funny, POW, proof of work, proof of weapons, right? And that there's sort of the military industrial complex that we all know of from the famous speech from the president who said it is escaping me, but there's that farewell speech from one of the presidents back in the day where he said, the biggest problem we have is not the enemy outside of our country, but the enemy within, which is the military industrial complex. That's paraphrased, very paraphrased. So the military industrial complex exists, and all of these industrial complexes that, yes, Eisenhower, thank you, Sin Diesel, I appreciate that. Amazing speech, by the way. Incredibly insightful to hear such a public figure and such an important, everybody was tuned in at that moment. And he said that specifically to bring public awareness of this problem. So all of these industrial complexes that Simon starts talking about in this video, he talks about the financial industrial complex, the medical industrial complex, and how they're all intertwined. And when you think about all of these, besides the financial industrial complex, they all need money. That's the entire goal, right? The industrial complex is a concept of a large system that is trying to sustain itself. And the way it does that is by intaking money and creating or exporting its product. So with the military, that is war, right? It's weapons and war and conflict. That's what it sustains itself on. And so it directly ties into the financial industrial complex. All of these are powered by finance. So what is finance but the ownership of assets, the ability to control financial institutions, to create more money, to allocate capital in certain aspects or certain industrial complexes. And essentially it all comes down to control. And I need to re-listen to this because there's a lot that I'm missing specifically from him. But my main takeaway is he talks a lot about how Bitcoin is this sort of uncontrollable asset that did usher in the idea of digital money in such a real way, but it was open sourced, and this is totally like completely on brand for me right now, which is I'm going down this incredible open source rabbit hole, which has been so great. Graphene on the phone, developing open source myself. Every single time I'm looking to do something, I look up open source alternatives, because essentially open source is code base that you can create software from, that you can install and use, that is free. All open source software, well, not all, but there's free and open source, right? So it's the alternative to these closed source binaries, which will run programs, but you'll have to reverse engineer them if you wanted to create something like that. So open source is the revolution. And it is, this video basically points back to this idea of David Chaum, who created eCash, Chaumian eCash, or the white paper on it, and some of the first attempts. Basically, I think he created eGold as well, which was centralized and shut down. But he attempted to create, without all of the pieces that Satoshi had, the first sort of digital money. And there's potential evidence that he was supposed to keep that closed source, and that it was some sort of attempt at sort of a programmable surveillance type money. And at the last minute, he basically open sourced it. And when you open source technology, you now allow the public to access it and develop upon it. And you're essentially giving an incredible amount of knowledge and power to the world. It's this idea of, so closed source and patents are very similar. So there's technological patents, not just based on code. And these things are to protect under law certain information, intellectual property, and ways of building certain things and all that. And this allows for businesses to have enterprise, to be able to protect their property. So that's sort of the reason to close source software as well. Is, Microsoft wants to have Word and Business and Teams and all this kind of stuff closed source, because they're selling that as a product. And if they open source it, it's much harder to create income and revenue from it. So open source is really this kind of selfless thing. It's this amount of work, or an equivalent amount of work, or relative. I think I'm just cutting out a little bit. All right, I think I'm back. So open source, as Rajat and I, or sorry, as Jor and I talked about, actually, is a revolution, right? Open source is this concept of creating. I can't even say that. Frozest. Paul, hi from Argentina. Welcome. Hey, Paul. And hey, Josh. So open source is this incredible ability to bring information to the public, and the public can run with it and additionally iterate on it or use it without cost. And this is sort of this concept, right? Like, the closed source model has allowed for companies to become incredibly profitable, to create a huge amount of economic activity. But it's all to profit from that company. And of course, there's trickle down and, jobs and all this, right? But open source allows for a lot of economic activity as well. Bitcoin is open source. Bitcoin is a $2 trillion plus asset. Bitcoin is the monetary base network. And the only reason it works is because it's open source. If it was closed source, nobody could trust it. Nobody could trust it. It could be programmed. The maintainers would have outsized control to change things. And if you updated to them, or if there was a forced update, or if it didn't work backwards compatible, you would update into more unknowns. Every single update would be unknown. The updates are fully verifiable. If you don't agree with them, you can go a different direction. And it's incredibly messy, the open source project that is Bitcoin. The soft fork that is coming up, that's being talked about, is proof of that. The past year of a policy default change of something that's been in place for 10 plus years is incredibly, so much confrontation, so much confliction of interest, and all these problems, right? So open source is so messy when it's incredibly important, the project that they're working on. If it's not important, if there's one, like, I'm working on pleb tools, which is open source. So far we've had 3 developers push commits to it, and I'm the only maintainer. I can say, you know what, I do, or no, what I said is, I like this retirement calculator that this person built. I'm going to merge it into the code. But if I didn't like it, I could say no, and there's no recourse. What are they going to do, right? There's no ability to take that public and say, pleb tools is screwing me. I'm going to fork it. I'm going to create a pleb tools patch, pleb tools knots. There's just no contention. There's no contention. There's nothing that really can be done. And there's a level of that too. There is power structures within a large open source project too, but there's a lot more that can be done. There's a lot more contention that can actually cause different effects within there. Essentially, what I'm saying to sum this up is the open source aspects that allowed Bitcoin to develop are incredibly powerful, and basically are the only reason that it works. So if you're curious, and this is part of his thoughts as well, where does this lead? Well, this is the open source money protocol, Bitcoin, that you can adopt. And it's allowed for certain technology like stablecoins, CBDCs, digital currency that can be closed source, can be forked from Bitcoin and changed. Consensus mechanisms can be removed. Ledger protocol layers can be changed, whatever. And these have developed into basically CBDCs and stablecoins, which are the exact opposite. So the technology that has birthed our financial freedom and ability to control our own money has also birthed, not birthed maybe, but progressed the movement towards a totalitarian control asset that functions as a medium of exchange as well. So there's sort of this duality of what's happening right now. And I think what this all comes down to is open source, as I talked about, is incredibly difficult to control, but it's not impossible. So how do you control it? You control it by making it meaningful, by allowing the market to make it meaningful. Like the market has made Bitcoin meaningful. Each Bitcoin's worth $100,000+. It started without a price tag. It was sub $100 for years. And now it's incredibly meaningful. People use it to understand the market correlation. It trades 24/7. It's the most liquid market in many ways. It has, it's the, I think, 9th or 10th biggest asset in the world, right? And it's incredible how meaningful it is at this point in history. And essentially, the way to control it is to own it. And I don't mean controlling it in a sense of being able to affect change on it, although that's maybe possible. But the inability to the way to control it is to take as much of it as you can as the financial industrial complex, to limit the ability for individuals to own and use their own bearer asset, that is Bitcoin. And Simon talks about a couple different aspects that are pretty intriguing, right? If they create more tax efficiencies, if they have these vehicles that are easier to get, to hold in certain parts of your portfolio, say IBIT, even MSTR, right? These are giving you price exposure to Bitcoin, but ultimately giving the Bitcoin to an entity that is not you. It's giving it to the custodians, and the ownership is held within and by, say, BlackRock or Strategy and Metaplanet and all these other ones, right? And that is not the revolution that Bitcoin is, right? You might have financial gain from your net worth from that. You might be more powerful because of it. You can create more change, but you'll have to sell those assets. And here's the thing too. What he talks about, which is really interesting, but I think can be mitigated. I think there's some gray area here. He talks about the problem with giving up custody. Giving up custody is there's always going to be attractive reasons to give up custody. And he talks about loans being one of them. Just recently, JP Morgan actually announced that they're going to allow loan products backed by Bitcoin. And this already exists for anybody holding IBIT in a margin account or Strategy in a margin account. And these are securitized loans. And the thing about securitized loans is if they're not protected enough, they can go to levels where those positions get liquidated, and then who takes ownership of those assets? Which is the question that needs to be asked, right? And the understanding that needs to be come to. So Bitcoin in self-custody cannot be taken. It cannot be seized, and it can be transported around the world in your mind. It can be protected by multiple backups that cannot be found. The keys can be split up in ways where you're protected, as simple as not having any seed at home and having multiple storage units, whether that's bank vaults or storage deposit boxes or what have you. In actually having to go to those physical locations will disrupt any potential attacker, and you can protect yourself by moving to those locations to get access to those Bitcoin, so no one can take it from you. If you put your Bitcoin in a loan product, you have to give up some semblance of control. So either you're locking it in a DeFi contract, which now you don't even own Bitcoin, you own some wrapped product that enables it on some crypto rails. And then you have an Oracle and a smart contract that if anything goes wrong with that, basically you're screwed. So there's lack of control within there. Plus you're probably having to do that in some sort of hot wallet, because cold storage or cold wallets are just not built for the crypto rails of DeFi, which really just shows how unimportant that aspect is to the people within those ecosystems. Then if you go Bitcoin only, again, discrete log contracts, you have Oracle risk, you have control risk within there. So you have custody, but you can't take control of your own custody without meeting the needs of the Oracle. And then there's full on sending your Bitcoin to, say, Ledin, which I've done and I've talked about. So I think that there's ways to mitigate that risk, but it's nonetheless a risk, right? And I've talked about that, I think, ad nauseum, that you're sending that to the custody of somebody else, and you sort of have a written law agreement. And again, ownership is 9/10 of the law, right? Which is not true, but it's to prove a point that technically you're having to fight for your own ownership in a certain circumstance. And you're securitizing that. So he talks a lot about the ability to control price by having the financial instruments to do so, which arguably, like people have been talking about with silver and gold for a really long time, and even this run of gold, right, seems kind of controlled if you think about it. Like gold is just running all of a sudden. Has it been suppressed until now? Have they sort of left off the suppression, or is it really market demand that's creating all this? Like ultimately it is, but is there sort of an artificial aspect of the market demand, which is totally possible. So he talks about flash crashes, which are pretty easy to do. And in crypto, this has happened, I think, only like 2 weeks ago or whatever it was, where was it $19 billion of liquidations or something like that. And essentially what's happening there is those loans are getting closed out. Those assets are getting essentially seized. Some of them might get returned to you, but they're getting seized to pay off the loan. So they change hands. The ownership of it changes hands. And that's the ultimate goal of the financial industrial complex, is to own as much assets as possible. Bitcoin is the apex asset. And so their goal is to own as much as possible. So they will do whatever they can to own it, including playing these financial games. And the only way to 100% protect yourself is to take self-custody. So this is why self-custody is so important. You are completely protecting yourself from any of this. Now, is it possible to play within there with and protect yourself enough that you are able to benefit from some of this? Yes. And with that is a massive gray area that you as an individual need to figure out, and it's not recommended for every single person. So something you can recommend for every single person is some degree of self-custody. Now, it is a skill. It needs to be learned. This is something that I continue to talk about and want to really jam down the throat of more people here, is that self-custody is not something you immediately jump into. A lot of people talk to me. I do a lot of client sessions, and every single one of them immediately comes to me with, I want to create a multi-sig. That's because they've been told that multi-sig is the best, and it ultimately is, but it should not be your first step. These are people that haven't even bought on an exchange, or maybe they've bought on Coinbase or something, but they immediately want to create a multi-sig. And I just think there's steps in between there. So self-custody is a skill, and you should be, if you're watching this now and you don't have self-custody of your own Bitcoin, you should be actively learning, okay, what do I need to know? What do I need to understand to be able to take self-custody and protect my Bitcoin for 100 years? What is it that I could do today to protect my Bitcoin for 100 years? Because right now you could set up something for that. Now, of course, somebody's going to probably say quantum and stuff throws a wrench in that, and maybe it does. But if you learn the self-custody of today, you'll be adept at moving your Bitcoin and recovering your Bitcoin and protecting it from quantum threat as well. So self-custody is a skill. You don't just immediately run a marathon. You don't just immediately play for, compete in the Olympics, right? These people hone their skills to become experts at that field. So self-custody is a skill, and you should be seriously thinking about how to learn that skill. So, and self-custody is the revolution. Self-custody is the revolution. So I think if you're playing within the financial industrial complex that is coming for your Bitcoin, they all want your Bitcoin. They will do things to try to get it. And whether that's you putting it in, a DeFi protocol that allows, loans of LTV of 70%, and then they'll liquidate you at 80%. So you take out a huge amount of that money right away, and any fluctuation within the price immediately liquidates you and you lose custody of it. Or something like Ledin that only allows 50, but again, the more they control, the more they can suppress, and then all of a sudden allow for a run up, and then allow for a crash, and manipulate the market within there to some degree to liquidate positions. During that massive liquidation event, Ledin and I believe Strike as well talked about how 0 people within their platform got liquidated. So I think that's amazing. And I think that you can add in additional, again, custodial risk is 100% there. And for me, I have less than 10% in a let-in loan of my Bitcoin, and I have additional uh, safety protocols within there. So I've lowered my LTV below 50, and I have a top-up account as well. So if prices fluctuate like crazy, it automatically tops up, so I don't have to race into the mempool and hope that my Bitcoin transaction goes in to protect this loan. Because the worst thing you can do in this moment in time is to give up your Bitcoin when you don't need to, right? We got Joe in the chat here, 88 Sats Radio. He gives up his Bitcoin, but that's because he needs to, because he lives on a Bitcoin standard. That isn't what I'm talking about, right? If you are so long Bitcoin that you don't have fiat, you have to sell your Bitcoin. You have to give up a portion of your Bitcoin to feed your family, to, drive your car, whatever. That is commendable, and that's where we should all strive to be. But if you have created a risk within your Bitcoin holdings, and that risk is custodial, that risk is a loan, you should be looking at how to protect yourself in that situation for that position, so that you don't ultimately lose that, because there's a way where you can lose your Bitcoin. And the only way to lose your Bitcoin in a self-custodial situation is by not doing it properly, right? And that's why, again, I reiterate that this is a skill to learn. You should not be setting up a wallet, a cold wallet, writing down your backup on paper only, not thinking, okay, do I want to do steel? Do I want to do titanium? Do I want to do a micro seed, the nylon one? Really cool idea. Do I want to go all the way into encrypting my information on an offline device? Do I want to create my own kind of encryption by circling words in a book and labeling them 1, 2, 3, and then putting that book on my shelf or maybe on a bookmark? How far do I want to go down? What are the different ways to protect myself? Do I need a safety deposit box? Do I need multiple? Do I set up a seed phrase only? Do I set up a seed phrase passphrase? Right? You need to learn all of this, in my opinion, to really take self-custody, importantly. And you need to know that your private keys are connected to your public receiving addresses. So when you're receiving Bitcoin, you need to know that you can also spend that Bitcoin, that you haven't accidentally created a second account or reset your device, or you need to make sure that your private key is associated with your public key as well. And likely that's from signing a transaction, from sending yourself some Bitcoin, restoring your wallet using your private keys and seeing the Bitcoin that's on there again, even though you wiped the device or used an entirely different device. And you can see that the Bitcoin is not stored on these devices that will degrade over time and be broken. Self-custody is a journey, and self-custody is ultimately a massive part of the Bitcoin revolution. Sin Diesel talks about budget neutral here. Yeah. The budget neutral way for the government, the pig slaughtering operation, which is such a funny, I saw that and I was like, wow, that's a crazy butcher that is, has billions of dollars of Bitcoin or whatever it was. No, it's about scamming people and fattening them up and then slaughtering them, basically. Yeah, I think the US has acquired a bunch of Bitcoin from that, right? And this is budget neutral. This is the way that they're going to try to take people's Bitcoin, is it being associated with anything that they can take it from in a budget neutral way. And I don't know how budget neutral that is, considering that they're hiring people, basically white hat hackers to do that. But yeah, we'll see. That's another way, right? It's just, you want to protect yourself in every way possible. I would be really cautious about your accounting. I mean, I'm not an accounting professional, but I would do everything by the book, because if it comes down to it and they can force you, like they can come to your door and they can harass you, they can really say like, oh, you now owe us this, and it's compounding, and it's this and this and this. And if you can't prove otherwise, eventually you might have to give up your Bitcoin. So I would be really cautious about everything. in every single way. I would look at all the attack vectors of how somebody can take your Bitcoin, because it's going to just become more and more important for the leeching class, for the organizations that acquire things in budget neutral ways, to take your Bitcoin, to seize your Bitcoin in some way, to get access to it. And ultimately, if you have it in self-custody, they cannot just take it from you. They cannot freeze it from you. They cannot collude with another to take it from you. They have to convince you ultimately, or coerce you, to give up your Bitcoin. This is the ultimate way to protect your Bitcoin, is through self-custody. And that is part of the revolution. Been thinking about buying calls on MSTR. Thoughts with this price action? Yeah, I think the volatility's come down a little bit. I think it's high 50s, I believe. I just looked at it today. Depends on what you're doing. Like, people have been buying sort of leaps and then rolling them, which is a pretty decent strategy in my eyes. MSTR is like, the price is just brutal right now. And a lot of people are saying it's dead and all this. And to me, that gives me a lot of conviction that it's absolutely not. It's been brutal holding MSTR for the past 3+ months. I'm just glad that a lot of people were knocking me about this video that I just recently made, where I showed my cost basis on strategy, with the caveat, which they clearly did not hear, that I was actually holding MSTE before that at a much lower price. And then I swapped that into MSTR. So my cost basis was readjusted upon buying it. But my actual cost basis would be in the low 200s, I would say, for that MSTR position, even though my rebought cost base was 440. Anyway, so I think that MSTR is underpriced. But again, this is so funny, the MSTR talk in this specific live stream. You're giving custody of the Bitcoin to MSTR, which has its is a concept that makes sense in a way where it's investing, right? And this comes back to this old concept that I think Rajat maybe coined. I've talked about it, and many others have as well, where Bitcoin is savings and MSTR is investing. And those are just two entirely different mechanisms. So there's merit to both. The revolution is not in buying MSTR or MSTR calls or anything like that, but there's the potential for the outperformance, which could empower you to some degree. And then ultimately, the goal is to acquire more Bitcoin. In my eyes, the goal is to buy more Bitcoin. And some people have that goal when they're trading shitcoins as well. But sometimes those shitcoins go to zero. I just talked to a guy who said that he had about 50 Bitcoin at one point worth of this coin that literally went to zero. So you don't want to fumble that bag, right? That's unfortunate, right? Like that probably sucks to think about. And to have the different reality that's different than that. So yeah, I would just be careful playing within the financial industrial complex. But there is potential. Again, you have to be smart, and you have to be okay with, because that's another way, right? Like, playing within these fields means having capital there means you're short Bitcoin, not shorting Bitcoin, not selling short against Bitcoin, but that you're not fully allocated to Bitcoin. So if you're long something else and shorting Bitcoin, you're expecting that your long is going to outperform Bitcoin. Is it possible? Yes. However, so if MSTR was at 1 MNAV, which I almost kind of think that like 1.3 is 1 MNAV for MSTR. Let me think about that. Let me try to explain that for a second. There's this premium on MSTR that feels embedded at this point, based on the passive flows, based on the debt instruments they have. And this allows them to still hit the ATM to be able to pay off the dividends. So like this today, right? MSTR published their buy, and they issued a bunch of their perfs, their debt or their liability, and they sold a bunch of MSTR as well and bought Bitcoin with that, but they also used that to pay the monthly dividends for STRC. So I kind of think that there's always going to be this slight premium. So I think we're really close to the MNAV compression that we're going to see on MSTR. And the thing is here, right, is if MSTR doesn't buy any more Bitcoin, it could technically, like if the MNAV compressed to 1, if you didn't buy during that point of compression, right? That's why MSTR shareholders are down so much right now, is because the MNAV has compressed. But MSTR has actually outperformed Bitcoin based on the acquisition of more Bitcoin. But the share price does not reflect that because of the compression of the MNAV. So if the MNAV was fully compressed, which I believe that it's basically there, like I believe that there is this slight premium on it. Maybe it's 1.2, I would say, because I don't think we're at the bottom yet. I don't know if we're going to the bottom, but I wouldn't say we're at near the bottom of that. So with that, I'm essentially saying that if you avoided all the MNAV compression and bought at the right time, right, timing the market, blah, 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 who cares? Then your performance in that asset should outperform because it's leveraged Bitcoin over time, right? Of course, there's going to be underperformance as well because leverage cuts both ways. So yeah, it's possible that we are close there, and that like leaps or shares could be a good position now. And I talked about this as well in my last video about MSTR. If you value the aspects of self-custody Bitcoin, you do not get those values in MSTR. So what do you value within your holdings? To me, I'm beginning to value self-custody Bitcoin more than the possible outperformance of MSTR. And I do still have a large MSTR bag, and I enjoy the volatility of it because I can sell covered calls and earn massive premiums compared to anything else around, in my opinion. And it's an asset that I would be okay holding for the long term, like really long term, like 10 plus years. So I still believe in it, I still hold it, and I do know that it is not self-custody Bitcoin. And I don't, I think, yeah. Anyway, Paul, we need to know about a dead man switch to ensure your self-custody details go over to your next of kin. Yeah, this is a really interesting aspect. You could actually have a time lock transaction so that it would send to a new wallet that would have more, have additional information so that somebody could get access to that wallet if they didn't have access to your current one. And then when that time lock transaction happens, they would have ownership of it. You could also, oh shoot, what was the other one? Oh, you could also have additional information, of course, not your private keys, but additional information in basically a time locked email that gets sent at a certain time as well. But yeah, that could be interesting to go deeper into. Those are the two ways that I've thought about having sort of a dead man switch. Yeah, time locked transactions and time locked email as well. And sort of having those are two different redundancy. You could do both of those, and there's sort of two different aspects, right? One is built into a script within Bitcoin, and the other one is built into the server of an email service. Cindy's good point regarding proof of accounting. Absolutely. Yeah, Brutal holding MSTE too. Yeah, MSTE performs very, very similarly to MSTR with the added 25% leverage and the covered calls. So yeah. Yes, investing long-term outlook. Agreed. The revolution is in BTC. Absolutely. Yeah. Naughty Vlogs, have you looked into Zcash or have thoughts on it? Yeah, my thoughts on Zcash is this is just like the most orchestrated pump and dump ever. It really doesn't matter really about it. Privacy layers are being developed on Bitcoin. eCash works really good for privacy. There's sort of the data set of how many people are using sort of a mint. There's the question of the mint itself who has control or access to that. But there's sort of the zero knowledge that happens in between redemption of the token into the Bitcoin holding. There's the custodial aspect of the mint holding your Bitcoin, which is again, another concern of eCash. And then there's the customer set, or the client set of how many people, right? Which Zcash would suffer from as well, is how many people are actually transacting, what are their on and off ramps. To me, it doesn't make sense to have privacy in the base layer as you open yourself up to additional vulnerabilities. You kind of have to question. What's really interesting is a lot of the concerns that people have about Bitcoin are intentional. So people say, "Oh, Bitcoin is so slow. It's ancient. It's not going to work. It's not going to be fast enough." There's a reason it's so slow. Oh, Bitcoin's not private on the base layer. It's a problem because people could do chain analysis. There's a reason that it's public. It's so that it's verifiable, right? So every single problem that people have with Bitcoin, I would say I haven't found one that there isn't actually a good reason for that to exist in that circumstance. So the thing is, right, is could Zcash work? Could Ethereum work? Could all these other coins work? Yes, but they won't because of Bitcoin, right? So on their own, in an ecosystem, they could become the base layer of money. There would be problems with that. Just as there will be problems with Bitcoin being that as well, which in my opinion, the biggest one is scaling, right? Is figuring out how to actually onboard everyone through a UTXO, figuring out the different scaling solutions and all of that. Lightning is part of it. Sidechains might be part of it. There's going to be additional technology built on it that will be part of it as well. So in an echo chamber, in its test environment, each one of these things would work as a base layer network of money, but they won't, because the one that is working the best and has the massive liquidity that really pushes all the other ones out is Bitcoin. And Bitcoin has decided to scale in layers, which makes a lot more sense. So if you need privacy, you can hop between layers instead. Even with Lightning, if you run your own Lightning channel, it's basically hopping through like encrypted routes. You have your own Lightning channel through Tor. You're protected through that to some degree. There's debate around how protected that is, but you're creating some sort of semblance of disconnection. And who knows between you and your merchant, who else knows about that transaction? And if you're doing that merchant transaction in person, then that person can say that they know who it was. Again, there has to be an assumption of that. It's not necessarily provable anywhere else. But if you're doing it remotely through a pseudonym, nobody knows, right? So there's a lot of ways to be private with Bitcoin already on the existing layers, and those layers haven't been specifically necessarily built for that. They sort of have that tied in, but they're sort of a scaling solution, or eCash is sort of an implementation of an older idea, but using Bitcoin instead of US dollars or something like that. So to me, this is all just pump and dump. This is like the VCs they got in early with Zcash. It's a $6 billion market cap. It's absolutely fucking nothing, by the way. Like it's basically not even really worth considering at this point. There's been a massive run up. There's also a pretty good theory that privacy coins on the layer one, where it's much easier to control them on that layer one, right? Bitcoin is not inherently a privacy tool, so there's no way they can ban that. But there's additional layers within there, and those layers become more difficult to control and to block, because again, open source technology allows anybody to run it. So you could just not allow exchanges to sell Zcash at a certain point and then it's pretty difficult to create the peer-to-peer ecosystem that would have to exist for that to really thrive and grow, right? Monero is like the other example of this. And there's sort of a little bit more peer-to-peer examples. Like there's some marketplaces to use that. And it's been getting banned off of exchanges, which in some sense makes a lot of the holders be like, oh, well, see, we prove that basically this is a threat to the whole thing here, which is an argument you can make. But it ultimately makes it more and more difficult to use. So Bitcoin having that base layer that is not that way allows you to use it that way on layer twos in an open source fashion, which is not controlled by on and off ramps, right? It's Bitcoin itself being added to an open source protocol. So what I'm saying here is there's the conspiracy that because the on and off ramps can be controlled so much, and because it's the layer one token, they can basically stop the allowance of these or fine regular exchanges and all this kind of stuff, and basically limit access for buying and selling of this thing. And then the VCs that have a whole bunch of this, they now have something that is continuing to go down in value, and they actually have no liquidity to be able to offload these things. So this could be a massive final pump and dump of privacy coins, layer one privacy coins, in my eyes. Again, conspiratorial thinking possibly, before some sort of regulation comes in that would make it very difficult for Zcashers to have a liquid market, and it would go peer to peer, and there might be some sort of underground scene for it. But how well will that develop? Will it just get competed out by other peer to peer layer one privacy coins, or by layer two, layer three privacy implementations of using Bitcoin? Yeah, you're welcome, Paul. Yeah, we're 51 minutes in. In a couple minutes, we're going to do another few tosses in the Bitcoin wishing well. Lots of money tied up in retirement accounts, unfortunately. What advice do you have for those holding Bitcoin ETFs in retirement accounts, particularly with talks of a potential soft fork? Yeah, I mean, none of this is financial advice, but what would I do if I had a bunch of Bitcoin ETFs and retirement accounts? If that money's tied up in there, you're part of the financial industrial complex. You can't do much about that. You're getting price exposure to Bitcoin, and you're paying the fee to BlackRock or Fidelity or whoever, and there's sort of you hope to retire and be able to access that capital, and you're holding it in something that is reflective of the best asset in the world. So it's better than holding the S&P. It's better than holding money market or bonds or anything else. So basically, that's what I would do personally, or I might invest it into something like MSTR as well. If you were able to access all this money and buy actual Bitcoin with it, you're not going to be able to have an effect with that Bitcoin currency, that unit, that money, over the aspect of this potential soft fork. The soft fork will get adopted if there's enough mining power that goes behind it that makes it the longest chain with the most proof of work. There's not really much you can do about a soft fork if enough people want it. So that's that. Really. That's what I would say about that. How do you weigh the tax savings of holding MSTR/IBIT in a tax-free account? How do you weigh the tax savings of holding MSTR? Yeah, so I have a TFSA here in Canada that's essentially maxed out. So I participate in the tax-free, in as much tax-free activity as I can within there. And then because it's maxed out, everything else that I get, I put into Bitcoin, right? Any extra savings, which is a little bit right now, but we're moving to a more expensive place, so it's going to become a little bit less maybe. But hopefully the value I provide will continue to go up as well. Hopefully I can provide more value. So my tax-free savings account is what it is. I think I have some IBIT calls in there. I do have some IBIT calls in there, but it's mostly MSTR and MSTE. And the MSTR I sell covered calls on within that tax-free account. So yeah, that is how I weigh it. yeah, the government that wants to have some semblance of control over my assets has enticed me in with that tax-free savings account. That's something I set up a long time ago as well, but you know, it's hard to beat that in some ways. So I understand that. Yeah, you're welcome, Naughty Vlogs. Nav, and again, just a couple minutes here, and then we're going to do some wishing well, and then I will wish you all well. When MSTR goes up, I'm going to do covered calls close to the money. I've been doing Tesla covered calls close to the money, and I have been in the money for a month now and haven't been liquidated. Interesting. Okay, so you roll it on the expiry day or whenever it gets above 10% strike. 10% strike. Okay. I'd be curious to why you roll it when it gets above 10% of the strike price. With your Tesla, you're in what I refer to as covered call purgatory, which is that you're just constantly rolling because you're in the money, and you can roll it up and you can roll it out, and you can either break even or have a premium even with that, because part of the value of that call is the expiry date. So you're rolling it out in time, which provides it more value, and you're allowing the theta decay, which is the time decay, to eat up the value of it as it gets closer to expiry day. I've done this once with the covered calls that I'm currently selling against my strategy position. Strategy had a massive run up, and I got into in the money, and I rolled it 1 week out, and MSTR crashed down again, and my call was completely out of the money. Someone told me you can get liquidated once it's deep in the money. Yeah, I mean, technically they could call your shares at any point, whether you're in the money or out of the money. Of course, if you're not in the money, there's no incentive for them to call the shares. If you're super deep in the money, they would actually be profitable beyond their break even, because they had a cost to acquire the calls to begin with that you're selling. So there's sort of a more likelihood. Again, there's a chance at all point, but your chance does go up as they go above their break even price. But ultimately, it's probably going to go to expiry anyway. But if you're in a sort of a taxable account, you really can't have that risk of them calling your shares away. Then yeah, that does make sense actually. Naughty Vlogs, do you see a day in the future when it will be hard for people to get their Bitcoin off layer 1 to layer 2, and their Bitcoin that's on layer 1 becomes useless because it will be too much to transfer? Yeah, that's a really good question. I think this is going to happen over a really long period of time, and I think that additional scaling solutions will be built. And there's the possibility that there's times within that whole trajectory where this could become a reality. I think ultimately, as problems develop, solutions to those problems develop as well. So we might be able to see a potential problem, but it takes a lot more thinking and a lot more like math and creation and coding and real thought to create a solution to a problem that doesn't even exist yet. So if a problem begins to exist, there becomes more reason to solve that problem. So this is a hypothetical problem. It's a good problem, right? If there's so much activity on the layer 1, that means that Bitcoin has massive adoption on its base layer. That's a really great problem to have. We had that problem. We've had that problem, and SegWit got introduced, which enabled the Lightning Network. There was more batching of transactions, which is more space efficient. Solutions began to present themselves to the problem that existed. So if this problem does exist and gets created, the smartest people in the world that are working on Bitcoin and layer 2s and all of the ecosystem around it will develop solutions to it. Now, it doesn't mean you can rest on your laurels. In my opinion, that means if you have some ability, some interest, that you should participate in this. It can be as much as saying, hey, this is a potential problem. Maybe we should work on it ahead of time, and being vocal about that, raising these questions as you did here, and so on, right? Like, it's really, we all have individual ability, and maybe that ability is to work on those problems. that exist or some problems that exist. That's ultimately like leads to a fulfilling life, right? That leads to a life with purpose is engaging in the problem solving of life. So yeah, I hope that we have that problem ultimately. All right, everybody, I'm going to throw a couple wishing wells or a couple coins in the wishing well, I should say, and we'll see who wins some more sats. And I'm also going to check out my Zap stream here, dashboard. I don't know if we're still up. It's just black on here. Everything looks good. 632 sats. So the first person that scans that with their Lightning wallet, and you will win some sats. We're going to do one more toss in the wishing well. I don't know what's going on with Zapstream. Appreciate everybody for tuning in here. Again, self-custody, incredibly important. If you guys need help with your self-custody journey, if you want to fast track that, you can book me for a session. I do one-on-one calls, and the vast majority of those calls are about self-custody and taking self-custody, taking control of your keys. Best practices. You might not even know the difference between a seed phrase, passphrase, or what have you. Booking. I mean, there's all the information to take self-custody is all online, but sorting through it, making the time mistakes that can happen, the cost mistakes, you can avoid all of that by getting help. So book me for a session. Link in the description. pathtobitcoin.xyz is my website, and it's right about here. And I have, you can book a one-on-one session. I also have some resources in here that go over all the different things I recommend and a bunch of discount links and stuff like that. All of this goes to support the show and everything that I do. And I appreciate you guys all for tuning in to the live stream. We'll see you. Right here. I know self-custody is important, but it seems difficult. It seems difficult and it can be done wrong, but it's ultimately not that difficult, especially once you learn it. It's not that difficult. Once you know it, it's sort of like riding a bike. You know how to do it. You do need to occasionally refresh yourself, but once you do it and you do it properly, you're good to go. Yeah, thanks everybody, and thanks for tuning in, everyone. We'll see you on the next one. We have bunch of videos coming out this week and a live stream on Friday with Maple Bitcoin, Jor, and Rajat. And we'll see everybody later. Goodbye.